Hello, everyone, and welcome to the Smart Investor. Smart. Why we say smart? Because I am here to educate you. Let's not forget that point. We are not trying to predict the market here. We're not trying to look at the stars and see what's going to happen next. No. We need to understand the environment that we are in and the way it is with all of these players and all of the stories that are happening at the same time. That is very important for you to understand if you want to make any type of money in this market, because we could go very minute, very micro, looking at day-to-day trading, or looking at long-term investment. But whatever you do, you need to be able to realize that this is all about the education, that you need to understand what's happening in this market for you to make any money in this market. So, what is the point here? What we're going to do today, it's the weekend, we're relaxing, cool. What we're going to do before the week starts, because it's going to be a very interesting week to make some money, is that we're going to see exactly where we stand. What's the bigger picture and what the future holds for us? Should we be concerned about the stock market? Should we be concerned about inflation? What's going on? What's the education? What is the future? So welcome back. Welcome back to the channel. Thank you for joining. Every day I post videos. I want you to be educated and I want you to make some money. There is a way to do it. Little bit at a time if you want to. Big bucks later on. But over time, very, very well educated. So don't forget to join my channel. Don't forget to like what you hear. That is very helpful. So let's get into it right now. What's really going on here? What is going on in the world of investments? Well, the first thing you need to understand the players, but these are larger players, right? So now we're not talking about social media, the network, the traders, people offering you advice and things like that. That's not what we're talking about. Here, we are talking about the bigger player. We're talking about the economy. We're talking about the dollar. We're talking about the amount of national debt. We're talking about the government. What do you care? Well, it's important for you to care because you need to understand, if you're going to be hunting in a forest, you need to know what kind of forest is this. Is this a haunted forest? Is this the dark forest? Is this a green forest? Where are you hunting? Where are the animals? What weapons we have? But before, you need to know what is the environment you're going to be in. If you're going to learn to ride a bike, are you going to learn to ride a bike on the middle of the highway? Probably not the best thing to do. So you need to understand what's going on. So essentially, we have an addiction to rates. What do I mean by that? Well, we have found out that the best way to deal with all of our issues really is for the Fed to lower or to raise and lower the rate to keep it as low as possible. Right? You're seeing that, right? I mean, everybody's panicking. What are they going to do? 25, 50, what's going on? They got to do it. They got to do it. They got to do it. Yes, it has been helpful. Yes, it has made a difference. But you need to understand that this amount of reliance on rates is probably not very healthy for the future. I explain. Let's go back a little bit to World War II. Let's go back to 1944. 1944, there was a meeting in Bretton Woods after the war where the Americans, where the Russians, and where the English decided, what are we going to do? How are we going to rule the world? How are we going to manage this post-World War II situation? And basically, follow me on this. This is important. Following this, they decided that the US dollars the US dollar, hello, was going to be the reserve currency. That's fantastic. That's great. So that means for any significant amount of trade, any significant of recognition, you need to do it with the dollar. Now, I don't know if you remember, but in the 30s, the 40s, the 50s, the 60s, we built a lot of stuff in the US. We were the engine of the world. We were exporting manufacturing. We were exporting lots and lots and lots of products. Unfortunately, if you're asking everyone to trade in dollars for any significant, you need to export the dollar. You need to create that currency. By creating that currency, de facto, you're creating a huge amount of debt. Now, for a while, it was great because everybody benefited from it. The US was at the top. We were exporting, the dollar was strong, but at the same time, you were also creating debt, building debt. And that debt has been growing and growing and growing. It is now larger than the GDP. It is now so large that it is for us to service that debt, it is now the second most expensive item in the budget. So first we have to spend money on entitlement, Social Security, and second one is servicing the debt. We're choking on it right now. Okay, so that was the issue leading up to it by us having to use the debt, right, to create dollars in order for the dollars to be used by everyone. And in fact, what was been happening is that instead of exporting goods and services more and more, we're exporting debt. We're exporting the dollar. Why do you think all these countries in Europe and Greece a few years back, and now Europe and Italy and all these countries are choking also on the debt? Correct. So you're saying, well, what does that have to do with the stock market? Well, it has a lot to do with the stock market because, and this is a good thing, it's a good thing, because for you to be able to keep the stock market going, you need to apply rates. You need to apply debt. So what we're doing is that we're lowering the rates in order to keep the stock to continue to go, and it will continue to go because you have a dilemma. You have a dilemma between dealing with the debt and the rates and taking care of the stock market. And no matter what you hear, they do not want a stock market crash. In fact, we haven't had one, and if we had, you will notice, good for us, trying to make money in the stock market, it doesn't stay down that long. Look what happened. I mean, if you think about 1929, how long it took for the stock market to recover. It took a long time. In 2000, when we had the dot-com bubble, the stock market took 15 years, and NASDAQ took 15 years to get back. Nowadays, we go up, we crap, and we go back up again right away. Look what happened on August 5th. Look what happened with the market vomited recently. So it's very, very, very temporary, which is good for us. So the collapse of that debt that's going to occur at some point needs to go through the stock market. But obviously, we don't want this to happen. So on one hand, we have to keep this thing going with the rates and the market and the economy because you're not going to have a recession. I mean, right now, do we have a recession? Well, payrolls are okay. Unemployment is under control. And even if it gets out of control, guess what they're going to do? They're going to simply lower the rates to manage this process. They don't want to do it too quickly to make sure they have ammunition to do it, but they got plenty of room. So I'm not really concerned about a recession. And even if we have a recession, they will take care of it very quickly. So I would expect the stock market to grow in 2025 because of the fact that we have a strong handle on the rates and the money supply and all these things to keep the machine going. The problem is that debt that we have is supporting a lot of entitlements. It's a different topic, right? It has nothing to do with the stock market itself. It has its own dilemma. It's getting more and more expensive. Entitlement, I'm talking about Social Security, Medicare, Medicaid, right? These are things that needs to be taken care of, and they are being taken care of by more and more and more debt. And obviously, you don't want to pay too much of high interest rates. So this is where the government has an issue by keeping rates too high. We need to find an happy medium, because we need inflation to keep the economy going, because we need growth, but you don't want to be too high, because then it's becoming too expensive to finance that debt. In the past, we never had to finance that debt with that much money, with that much high interest. But now the interest is going to be high, and it's going to stay high for a while. We're not going to see 0%. Maybe we're going to get down to 2.5, but not 0. So it keeps on going and going. So on one end, you have those entitlement issues, because at some point, for you to keep these things going, you have to keep raising debt. I mean, the money's got to come from somewhere. Somebody's got to buy our debt. Will it come to a point where they don't? So the government is threading a needle. And this is what I meant a couple of days ago when I said that this is three-dimensional chess. This is not just a simple thing where we're trying to raise the rate, lower the rate, stock market up and down. Forget that. What they're worried about is that we need to get this debt under control before it's too late. So what do? And you've heard it. You've heard the candidates talk about it. What we need to do, instead of exporting our dollar, we need to start getting control, and we need to remove the dollar from that system. Remember the dollar as a reserve currency? Yeah, well, you know what? We have too much debt because of it, so we need to pull back. And that's why you hear certain candidates saying, "Oh, we're losing the dominance." Well, maybe you may want to do that. In fact, a lot of them are talking, let's bring everything back home. Let's be with ourselves, because what's happening is you are not in control of your economy anymore because of the amount of debt. So it's time now to start, well, you heard, let's raise the tariffs. Let's bring everything to the U.S. and make more stuff here. The idea of us being out there and ruling the world with the dollar, ruling the world with our economy, ruling the world with our armies and our defense and everything, that's extremely expensive, right? It requires us to keep pumping, increasing the amount of debt that we have more and more and more and more. You need to pull back, and of course, as you've done this, right, you've created a huge amount of disparity between the rich and the poor. What do you think you're seeing all this turmoil going on right now? There's a tremendous amount of turmoil in the world right now because of it. Now, of course, the stock market, don't worry, it's going to be just fine, because they don't want that to crash. They want to keep that thing going, because if that's crashing, then you've got the debt. Then the whole system is going to collapse. You don't want that. So the way we do it. So what they're doing on the side is they're trying to reduce the amount of dollars, the dollar being used for every single thing, because you got to keep pumping and creating it. Okay? So what we're going to do is we're going to try to remove the influence slowly of the dollar to become more a currency in the U.S. I mean, you've heard about the BRICS countries, right? Which is Brazil, Russia, all these other countries that they have their own currency. Well, maybe it's not such a bad thing, because when you say we want the dollar dominance, there's a cost to it, and we are not able to. Now, why did we raise the amount? Well, we raised the amount of debt because we had 2008, and then we had COVID, and we had a bunch of other things, and frankly, politically speaking, no one wants to talk about the debt. So everybody wants more stuff. So your dollar currency, then you just pump it. And everybody wants our dollars, right? They want the dollars because it's the reserve currency. So you don't mind printing it and then refinancing it and giving it to the people. The people say, yeah, we'll take it. We love it. This is what we want. So that is what's happening as a bigger picture. Now, the good news for us investors is that because they are very concerned about keeping the economy and the stock market going, frankly, at the end of the day, we would be doing just fine, because they will manage it through the rate system, right? They will and frankly, we don't have a recession, right? I mean, again, this is where we have to go back and talk about the players, right? You have to make sure you understand who's talking to you. Who are those people talking to you? Are they the people saying that we're going to have a recession? Well, I don't know. I guess if you're selling a service, which is I want to give you advice, if your advice is saying everything is going to be great, so all these economists and people that are basically advisors, if they tell you, it's always safe, it's going to be sunny forever, so don't worry, what do you need that person for? You need the person to tell you, is it going to rain tomorrow? Because I need to know. Nah, it's not going to rain for the next 10 years. Well, you know what? I mean, thanks for the advice, but I don't need you then. Right? So these people are basically going to tell you that there's always going to be issue. Of course, social media feeds on the amount of views, and people want to hear bad news and good news. Today, this is good news. I mean, I'm not worried about anything, quite frankly. You're going to say, well, then I should invest. Now, obviously, you're going to need me to tell you, be careful. I mean, I didn't say buy anything. You need to know what you're looking at. But basically, we should be fine. Now, the other thing is you've got the traders. The traders, obviously, they're trying to position their books. So they're going to tell you, I like this company, I like that company, I like this other company, this stock. But obviously, they're pumping out their own game. So obviously, they like them. Otherwise, they wouldn't be buying them. But what you don't see is the risk, what they have on the side. You don't see their position. You don't see their hedging that they have. And that's important. You need to see that. Next, you've got the channels. Well, the channels, obviously, like myself, they want to create views for themselves so you keep watching them, right? So they can be monetized, they can be sold. I mean, so you have to understand. This is part of the education process. I'm not saying it's bad. I'm just saying understand the process. If somebody's out there telling you you're going to be a millionaire next month, if you buy this stock, if you buy Nvidia. What does that mean, really? I mean, Nvidia has already taken off. I mean, I don't think how much more can it go, right? So at the end of the day, what you want to make sure is you understand that. You also want to make sure that you understand that we cannot predict the market. You can't predict the market. Otherwise, you would have done it already, and there won't be a need for anything. Everybody will be making money, right? That doesn't work that way. It's not about recommendation. It's about a prediction, right? You don't want to be. It's not about predicting the market. Okay, so having said all that, what's out there? What's interesting? Well, let's take a look at our portfolio. And as you could see in my portfolio, look at it right now. Don't forget, subscribe to this channel, and also make sure you get onto my Patreon channel as well. I show you all my trades. I show you what we're doing. We're doing quite fine. Thank you very much. Yes, last week we posted like 60% return. Fantastic. Look at it. You see right here. This is our portfolio. And I like it very much. So I did allude to the fact that as long as we don't talk too much about the U.S. rising debt, we are okay. So because right now we're mostly focused on the Fed and the 50 bips, the 25 bips. All right, but that's chicken feed, right? Of course, if we start to talk about the national debt, then we are in a whole different world of hurt here, right? Because now there's nothing to do except lower it, and you lower the national debt you're going to need lots of growth in the economy, so that means a bit of inflation. That also means you may have to raise taxes, you may have to cut entitlements, and entitlement I'm talking about Social Security and Medicare and Medicaid, and so that's a pretty big undertaking, right? So I'm not so sure if we're ready to deal with this kind of things, if we're ready to comprehend and to make the decision tied to something like that. So that's very, very, very difficult. So let's see what these guys are talking about. This is Steve Ballmer. He was the CEO of Microsoft, retired 10 years now. And one of the things that he does is precisely that. He comes up with facts and figure.
One thing that we can, I think bipartisanly, if there's such a word, assess, is that debt keeps piling on, right? And both candidates, of course, have plans that will add to that debt, depending on if you believe the figures attached to them. There's a Wharton survey that shows it goes up another trillion, almost $2 trillion under Kamala Harris, could go up $5 trillion or more under Donald Trump. No way of knowing for sure. And as you've reminded me, a lot of this stuff often isn't worth the paper it's printed on. But to get back to that notion of a government that gets bigger and the money that's coming in to pay for that, I'm just wondering how that all works out.
I mean, look at this. Look at this. 35 trillion, debt per citizen 100,000, debt per taxpayer 200, debt per citizen. That means every single person in the United States owes $104,000.
Well, when you get right down to it, I won't make forecasts, but let's look at some basic facts. The country took in about 4.4 trillion in revenue last year. We paid out.
Now this guy is a millionaire, right? So he's got no vested interest one way or the other. He made his money. He's just doing it purely for the fact of helping and being nonpartisan.
6.1 trillion in revenue, 1.7 trillion, depending on how you look at it, as a percentage of tax revenue is called 40%. So strikes me as a lot, but everybody can draw their own opinions. The problem is when you look at the spending, mandatory spending, Social Security, Medicare, Medicaid, veterans benefits, things that the population expects, if I might say, that's, as a total accounts for, let's say 60%. You add in the debt. I think most people would think our country should pay its debt. Then you add in the military, and you only have about $1 trillion or so left. And so those are the places where many people would look for cuts. I just don't think it's easy to find the kinds of cuts that people might want.
So basically, you're not gonna be able to cut the stuff that nobody needs to reduce the debt. That points to the fact that it is almost impossible to lower it.
Trying to get back towards a balanced budget.
Well, therein lies the rub, right? Because you're right. That's where the money is, and the money that has to be addressed. And I didn't know it was as high as the 60% above figure that you alluded to. But the fact of the matter is, neither candidate right now wants to cross that third rail. We have a proposal by Donald Trump not to tax Social Security benefits, not to tax overtime, not to tax tips. All well and good for those audiences who love to hear that kind of stuff. But similar giveaway.
Yeah, I mean, basically what we're saying is we're not going to tax. In fact, when you say we're not going to tax, we're basically, I mean, because we have to come up with the money to pay what we owe, right? In terms of that deficit, which is about $1 trillion, almost more than once a year, actually. But the point is that now if you're going to reduce taxes, so now you're going to owe more money and you're going to add to the debt. So yeah, it may sound good when Donald Trump says, I'm not going to cut taxes. I'm not going to charge you for your tips. Well, waitresses, don't make much money. Okay, fine. So we're not going to cut, on the Social Security. Well, that money that you're not collecting, you still have to collect it to pay back what you owe.
By the Kamala Harris camp. In other words, it's very easy to propose tax cuts and dealing with things that could make it more onerous for these programs down the road. So
we don't want to, one thing is for sure, we don't want to hear that kind of talk every day about the debt, because then if the market starts picking up and start focusing on that and then say, what are you going to do about it? There's nothing you can do. And more importantly, at some point, the people or the institution or the dealers that are buying the debt, because how do you refinance this thing, right? You need to find people that are willing to take on more debt to pay off what is owed. So we're just refinancing, right? So we have to find investors that are willing to do it. And I did a video on it, and a couple of weeks ago, they had some issues actually finding takers for that kind of debt.
Wondering how that sorts out, because if we're concerned about all the money going out and a lot less money coming in, it's not reflected in polls. The debt and these deficits that pile up year after year don't seem to be a worry for America.
Okay, capital gain tax. So they're gonna basically what she's doing, the tax hikes and the tax bet. So what she's doing is that she's gonna ask the quote unquote rich to pay more, the corporate to go more. No increase for us, the people that are making $400,000. And then, of course, what they're going to do is they're going to expand the small business tax credit. They're going to cutting the red tape, and they're going to give you $6,000 from newborn. So technically, from what I understand, is what the right side is being paid by the left side.
What do you think of that?
Well, let me say the following. Again, everybody's entitled to their own opinion. On this one, I'll share my opinion. I worry about our increasing debt as a percentage of our GDP. I mean, if you think about companies, there's companies that live with a certain amount of debt forever. But if you look at debt, if you will, as a percentage of revenue or profit.
Well, this is basically what I've been saying is the reason why we have so much debt is because originally the dollar, is a reserve currency, and for years we've been growing it because everybody wants that debt, right? If nobody took the US dollars, right? If nobody took the US dollars as currency, then it would be difficult for us to keep raising and spending more, but we find takers for the debt. Why? Because it's dollars. Dollars, if it's a reserve currency, it means something. You can't redo without it across the world to buy and sell things. So obviously, it forces us to issue more and more debt. And since everyone is taking it, then we'll just feed the beast, and it keeps on going. But at some point, they're going to say no more. Of course, when they say no more, that means they don't need more dollars. That means that the power of the dollar has been reduced.
It can't just keep growing. And right now, we've got about an economy, call it 27 trillion. We have debt of 35 trillion. Being over 100%, it's the highest our debt has been as a percent of GDP since World War II. And I think people will accept we had some special exigencies in during the war period in terms of what we needed to spend. So
that small reference to the war period that I've been talking about, 1945.
It doesn't pop. I understand it doesn't pop. If you look at people personally, they want more. Government can give it to them in terms of higher spending on them or on lower taxes. Both parties seem to have somewhat different viewpoints about how to get there. But this notion of, hey, let's at least make a dent in the growth in debt as a percentage of GDP, I agree, does not come up in the dialogue.
This famous debate, no one talked about this. No, as an investor and for you to make money, I think right now, it is not an issue, so let's not worry about it for Monday morning. But you need to keep this in the back of your head that at some point when that thing comes to roost, it might be difficult. It might be an issue. How is it going to happen? Well, it's very simply, there won't be any. It's either A, there won't be money to finance the debt, so then you have to retire later. You don't have the money. You don't have the money. So what do? Well, you retire later, you take less money, you increase taxes, and of course you go into recession. I mean, we're not in that situation. We're not Greece, okay? Or with the stock market is that they're gonna essentially need to lower the rates to keep this thing going. But at some point, when you run out of money to pay for the entitlements, it's gonna have to come from somewhere, and unless you deal with it tactfully and slowly, but there's no intent of doing it right now.
And I don't, again, I speak now not as a provider of facts, but as a citizen. Nobody thinks it's going to be a big issue in this election.
Which is amazing, right? I mean, we're talking about the border, we're talking about abortion. I mean, an important topic, but nothing compares to the debt. Now, remember COVID? Nobody cared about COVID because we said, well, we're going to be stuck in our house and we can't get out. Come on, don't be ridiculous. That could never happen to us. Hold that thought, people. Hold that thought. You're here to be educated, to understand what's happening so you're a better investor. You need to know that this is in the back of everybody's mind.
You are a citizen, but you're also one of the richest guys on the planet. And you've probably heard from candidates, and this is routine, up to say that billionaires, guys like you, should pay more. And I've gotten back and forth into this with both sides, that what represents a fair share, or the rich paying a fair share. We used to have a top rate, as you know, Steve, was 90%, that's 70%, 50%, in and around the 37 to 39, 40% today. But we go back and forth on that, and the old saw is that the rich aren't doing enough. I know you've heard it many times, but what do you think of that?
Well, let's just look at some numbers. 76% of income tax, not including Social Security, sales, property taxes, but 76% of federal income tax is paid by the top 20% of tax-paying units, families, households, as we might think of them. And those are families with over $160,000 of household income. Now, will that full set of people feel affluent enough to absorb more taxes? Probably not. But if you want to substantially increase taxes, you may have to get to that broader group. Would I personally be happy and willing to pay more tax? Yes, I would. But that's me personally. I can't speak for all people who are super affluent as I am.
All right. We'll watch what happens. Always good catching.
So be aware of this. This is quite important, and it's going to make quite a dent at some point once it hits.